So you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning, your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Dave Root, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3 p.m. Eastern Time on Fed Day. And boy, we got quite a market, folks, to the downside. The market, they want rate cuts, and it seems like they might get 2 of them next year. That's down from 4 last year. And let's jump over to the headline before we jump through it. The Fed lowers rates by a 1/4 point. That was all but guaranteed. But where are they going in 2025? How about just 2 cuts in 2025? That's down from 4 cuts previously. Rates are on the rise today. We got the 10-year right now. The 10-year pushing. What are we at? 4.49. I was waiting for 4.5. And we got markets reacting to negative territory right now on higher yield. We got dollar strength. And boy, this market's not stopping right now. We put it on a 5-minute. There's your drop-off. How about 100 points from where we were coming into that announcement at 2 p.m. Eastern Time? Chairman Powell still talking. We were airing his press conference live right here on TFNN. They're on a pause right now. 2 is what they're talking about, and realistically, the market is thinking maybe 1 to 2. As rates are on the rise, markets are on the decline, and we got the S&Ps off by 1.5% right now, trading at 6,036. NASDAQ 100. We are off 2.1%, 469 points, 21,850 right now. The Dow continuing the trade lower. You're talking about, what are we at now? 3, 6, 9. This would be the 10th consecutive negative day. Remember, we got a little bit of rollover in futures. Even though you get a gap there, that is not a trade higher in the market. That is just a rollover in the futures. The Dow. Today's going to be the 10th red day, and I don't think it's going to turn green after this one. Dow off 1.2%. And how about the Russell off by 2.8%? 2.8%. Now, remember, a lot of those smaller companies, they have a lot more short-term duration. So when you look at these companies, if rates are going to stay high, that could be an oversized influence on the Russell. The reason why you see the Russell reacting off by 2.9%. Bitcoin. Yeah, the ultimate growth stock. I kid, but nonetheless, Bitcoin trading lower with the market, off by 5%, $5,100 right now. We jump to yields. Let's go to the 10-year first. The 10-year right now, 4.49. There's your drop-off. You talk about it. Almost a full point from 109.29 to 108.31. And it is interesting, if you look at the 10-year, where we are right now, the lows in November, 108.30. And we just hit 108.31.5, so almost to the tick. We test that low. We're sitting at 4.5%, and rates higher than the market had expected. Now, when you got higher yield, what's that going to do to the dollar? You better believe it, man. You check out this move in the dollar. That's a move for you. More than a full point from exactly 107 at 2 p.m. Eastern Time to exactly 108. And you take a look at the dollar on a longer-term basis. Just remove that one, as we are not bumping up against, and we are. And yeah, you had a little bit of a spike high, okay, a month ago on November 18th, but this is a 2-year period, and we have a dramatic dollar strength. We came into the election with the dollar, okay, let's find the election. There it is right there. Day after the election. Dollar's trading about 104. That starts the acceleration. We just overcame the high you had on November 22nd. And you got dollar strength. You got higher yields. And, yeah, we'll see where the Fed goes. And that, of course, is going to be a tough one for gold. When you got some dollar strength, you got gold weakness. Gold down $41 right now, off 1.5% at $26.20. And we jump back to the headline. So they cut by a quarter point. Their target range is now 4.25% to 4.5%. It was an 11-1 vote. The only dissent was Cleveland Fed President Beth Hammack voted against the action, and he said it was a close call. I was listening to some of the press conference. It was a close call, whether they cut now. They cut. That's their fourth cut. They bring their target range down by 100 basis points, but then they're going to pause a bit, okay? And jumping around the headlines here. Is this the live one? Yes, it is. Okay, it updated on me. He thinks it's pretty clear. We've avoided a recession. Okay, now we'll see where we go. Time is going to tell if there's any lag factors, which is why they're going to be a little bit cautious. Okay. Housing activity, very low. That's largely because the Fed policy. He's talking about the influence they have had with their higher rates coming down the line. We have a long string now of inflation coming down gradually over time. We still have some work to do, though, and we need policy to remain restrictive to get that work done. Now, in terms of where they think interest rates and growth are going, okay, policymakers see unemployment at 4.3%. They raised their forecast for economic growth to 2.1% next year, okay? But when you talk about where they think they're going to settle, they raised that to 3% from 2.9. It's been a gradual estimate, but they are pushing that natural rate higher, and they're doing it slowly. Officials, again, raised their median estimate of where policy rates will settle over the long run, okay, to 3% from 2.9, substantial uncertainty over the neutral rate. We all know that. There's substantial uncertainty across the board here. They're going to reduce the rate it pays lenders using its overnight reverse repo facility by 30 basis points. So they effectively lower that rate by 5 basis points relative to the Fed funds target range, aligning it with the lower bound. Nonetheless, the market says, wait a second, we're only going to get 2? We're only going to get 2 is what we're going to get. What happened to 4? No, 4 is not in play right now. They are going to be pausing to a certain degree. And what's interesting is you look at where the market, so this is the CME Fed Watch tool, okay, and what this is doing is, okay, right as it says up here, to track the probabilities of changes to the Fed rate as implied by the 30-day Fed funds futures prices, okay? And what's so interesting is that you go out to December, the market's thinking maybe 1 cut right now. 36% chance by December 10th of 2025. That's 8 meetings into the future after today. Okay? This market is listening to the Fed, and it is saying, hey, guess what? They're going to be cautious. They got 2 rate cuts penciled in, and right now the market, if it had to guess, would say it's only going to be 1. So we'll see. Rates going higher today, but what I will say is this market already knew that we weren't getting 4 cuts. Okay? That was priced in. We were not getting 4 cuts. The market knew that. The Fed has now told us we're getting 2. The market already knew that we were potentially getting 2 per the data right now. Now, their next meeting, January 29th, after the new administration. Trump's going to be in there. We'll see where that goes. And that'll be an interesting one. All right. It's a great day to talk about some of this action. Coming back, folks, we got a great guest. We got Elliot Wallenbach from Direction. He's going to be talking to us about some of these markets, some of the ETFs, and some of the movers. We'll talk to Elliot when we get back. Quite a day in the markets. S&P's off 96. Stay tuned, folks. We're coming right back.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money!
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this holiday Tiger Dollar double bonus sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks, and boy, it's not stopping. S&P's now down 105, NASDAQ 100 off 516, and the Dow off 632. Quite a day, and to talk about it all, we got our man Elliot Wallenbach. Elliot is Senior Vice President with Direction, folks. We've had him on the program before, and boy, quite a day to have him back on. Elliot, good afternoon.
Hey, good afternoon, Tommy. Happy to be back, and yeah, we have quite a lot to talk about right now.
Oof, you know, it's great, Elliot. We have you on Wednesdays. We always get some action. We got Fed Day today, and we were emailing, of course, and, you know, aware of today. But, boy, quite the market reaction. So let's touch on that briefly. What do you think? The Fed's thinking maybe 2 cuts now next year. The market already knew it might not be 4, but quite a reaction with yields on the rise yet again this afternoon.
Yeah, no, definitely. I mean, yeah, just to recap, you know, expected the 25 basis point cut that we had today. And, you know, there was some consideration that it might be refined for next year of maybe only potentially 2 cuts for 2025. And we definitely saw that rhetoric of the refined number of most likely 2 cuts. And, you know, Powell saying that, you know, their target is, you know, 3.75 to 4%. So implying 2 cuts by the end of 2025. And that just reflects higher inflation readings and continued higher inflation into 2025. Of course, you know, they've been saying all along that they're going to be data dependent, so that could change. But they've been very transparent so far. And like you mentioned, the 2-year was moving higher along with the rest of the yields. And yeah, it's been pretty interesting today.
Boy, and this is the next meeting we get. The next press conference is under a new administration. So they said they're modeling potentially for some of those policies that may be coming down the line, but not factoring them in terms of the decisions. But next meeting, I think it's January 29th. So things move quickly. And as traders, we got some volatility, to say the least. They're not the only story, of course, man. They're the story right now. But, boy, we got some movers this week. And I wanted to ask you about Broadcom. You know, it's amazing. You guys have these single stock ETFs, of course. The traders in the den love them. I love them myself. But Broadcom, talk to me about Broadcom. I was reading an article on Bloomberg earlier this week. They were calling it, quote, unquote, their NVIDIA moment. But quite an earnings in the market, repricing Broadcom to the upside. What do you think of that rally?
Yeah, no, definitely. Broadcom hitting record highs last week following the earnings, which they weren't, shattering earnings, but it was really the forward guidance and statements that propelled it higher. around their ASIC chips potentially being more efficient than GPUs, and which could really lead to cost savings for big AI data centers. And like you mentioned, we do have a handful of single stock ETFs, and specifically to Broadcom. The bull side of that is ticker AVL. That's a 2x daily, Broadcom ETF. And we also have, for the inverse side, a single inverse off of Broadcom. AVS is the ticker. And I saw that same statement on Bloomberg, actually, saying that Broadcom's starting to have their NVIDIA moment. And we've seen these are two of our newer additions to the single stock suite. And, we've seen a significant uptick in trading last week and this week as well in both pairs. Some speculative moves on short-term trading higher. Also on the single inverse side, taking a short-term inverse view, or also some potential traders looking to hedge out positions that they currently have with the single inverse that can be used that way as well.
I love the hedge, and as traders, I love it, man, because I was talking to Jacob in our office who does some programs with us, and we were talking about shorting in general, and it seems like, there's a bunch of smaller, tiny stocks that don't have their own ETFs yet, but it's difficult to short on so many occasions, and these make it so easy, which is so cool. And then you have the hedging, which just is a no-brainer, man. And some of these equities, you want to lay off on a day like for today, for instance. You want to lay off today in terms of lay off some risk after the run you had on Broadcom. And we got Broadcom. What is it doing now? I just looked at it, down 6.2%. Now, all things considered, it's up from 180 to 225. But as you can see, 6.2%, and those are pretty cool vehicles that you can lay that off in terms of that risk, even for an overnight with, and I know you guys have fees, we know it, but basically no fees when you're talking about a short term, when you're talking about a week of trading, whatever it is, pretty cool. Now, we're coming into Christmas, man. It's 1 week from Christmas today, and these markets outside of today were on quite a run. Is the Christmas rally already over, Elliot? What's going on? What do you think as we come into 2025 here as holiday trading? Pretty much may kick off after, a lot of people said maybe today. Things may take a little time to sort out after this market move, but we come into Christmas week and New Year's. What do you think about this market trailing off into the end of a pretty strong 2024?
Yeah, it has been a very strong 2024 so far, and we've seen a rally for even starting before December. But yeah, the classic Santa Claus rally. I mean, starting it off, we just had U.S. retail sales come in for November that were slightly higher, surge in car purchases and solid online shopping. You also saw strong Black Friday and Cyber Monday promotionals, sales that generated some pretty massive sales on platforms like Amazon. So we already had that pre Santa Claus rally around the retail and the consumer that we can definitely might continue on throughout the rest of the year. So I mean, a couple ways that you can approach this. We do have a retail 3x bull. That ticker is RETL. That's equal weight to retail select sector. And if you're looking to get a little bit more, concentrated, we also do have a consumer discretionary bull 3X. That ticker is WANT, WANT. And that's market cap weighted. So you're going to, the heaviest weights are Amazon, Tesla, two kind of names for a variety of reasons beyond just the consumer spending have really taken off over the past month and actually, really through this year. And, one more, just we'll throw it out there. If you want to get even more granular, back to the single stocks, we do have single stock pairs off of both Amazon and Tesla. AMZU 2X bull, AMZD 1X bear off of Amazon, and then of course the Tesla TSLL is the 2X bull, TSLS is the one single inverse bear. So if you really want to be trading those specific names, whether it's off of the retail spending and the consumer, or especially around Tesla, the potential deregulation, with the potential of that with the upcoming administration, another way to play that.
And it is pretty cool, man. Tesla today itself, just the underlying equity, down by 7%. But as we know, that's stock, my goodness, stratospheric. But boy, some big moves for the ETFs, and then that's pretty cool, down by 10.2% today, but yeah, up from $40 to 67. We got some moves in this market, man. I was looking at Walmart. How about the year Walmart has? Jumping around, right? But how about the year Walmart's putting together in retail? I was reading an article just dwarfing everything going on in consumer. They're having quite a year. Walmart, even on a day like today, Elliot, down only 0.4%, holding up so well. Elliot, I appreciate the time. That was a quick 9 minutes, man. We got a lot to talk about. I appreciate the time on a busy day, man. Have a great Christmas, great holiday, and we look forward to talking to you in 2025.
Hey, thanks, Tommy. Great being here. Thank you for having me.
Thanks, Elliot. Folks, you heard it. Some great ETFs. Head on over to the front page of TFNN. You'll see those direction banners right there. Click on them, check them out, and we'll be right back after the break, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. And boy, we're almost to the tick. This is a 5-minute chart, folks, and we are coming down to session lows with the S&Ps off 1.9%, NASDAQ 100 off 2.6%, Dow off 1.5%, and the Russell off by 3.6%. And as I mentioned, so the Russell, you're dealing with a bunch of smaller companies in general, right? Russell, small caps. A lot of those companies have a lot more exposure, as I mentioned, to shorter duration. So what's that going to mean? They are more prone to interest rate volatility. Okay, so if rates go down, that would be a big bonus for them versus some of the larger companies that have gone to market with longer duration debt. These shorter companies don't always have that luxury. So as a result, if rates go up, man, they are in trouble. We'll see how they go. But nonetheless, 3.7%, just like that. Pretty remarkable. As Elliot was talking through some of those, even on a day like today, NVIDIA is positive. Now, yeah, you've pulled back from 152, and you were trading at 136 coming into that number, so you trade down 1.5%, almost $5 from where you were at 136 on NVIDIA, but pretty remarkable. And yeah, you talk about Broadcom, right? AVGO down by 7% to 223, and it is interesting. AVL, directions long one, double long, down by 14%. All right. Now remember, it's about a 6.8% decline. So that's a double. But then AVL for long and AVS for short, right? Right in line. AVS up by 7.1%. Broadcom down by 7.1%. An identical hedge, which is just awesome. You could see it, right? There's many situations that you may want to go risk off on an equity without selling it. Especially today's like a perfect day. December 18th, do you really want to lock in a capital gain, right? 12 days before the end of the year. Maybe what you do is you hedge yourself out for 12 days. You sell in 2025, right? That incurs the capital gain in 2025. Maybe you just want to risk off of the earnings, whatever it is. Pay attention to these single stock ETFs when it comes to shorting, but also hedging. Because you may find, especially, for investors in AVGO, this is a daily. You just traded up from 170 to 255. Nothing wrong with laying off a little bit of risk coming into a Fed decision, and we see why on a day like today. Hindsight 2020, but keep them in mind, as I think they're going to be, and we see it, right? They are on the rise. I don't think they are. Single stock ETFs for sure. All right, we jump around to what else we got going on. How about this deal potentially today? Talking about Nissan and Honda coming out. They're talking to potentially become the third largest vehicle maker, and yeah, that would push them to about 8 million sales annually, only behind Toyota and Volkswagen as the march is on to EVs, as they put it. But guess what? It's not on just yet, man. Yeah, we are not ready for EVs just yet. The market has told the automakers, and they've slowed things down. But nonetheless, that deal, and they're talking about it. Renault is on board with discussions. And yeah, we'll see where they go from there. But that deal exploding today. So some of the Powell quotes I was talking about in terms of wordage that stuck with me here, they're not renaming the phase, but they're in a quote-unquote different place. That's in terms of cuts versus a pause versus a skip. Call it what you want, right? We are significantly closer to neutral. Well, they already told you. They just bumped the longer-term rate. They see the longer-term rate now being at 3%. It was 2.9. They see it at 3. Okay, we still think we are meaningfully restrictive. If they think the longer term rate is 3 and they're now at a range of 4.25% to 4.5%, you better believe that's restrictive. Okay, and they might not be at 3% just yet. That's the longer term R star natural rate of growth, right? It's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points. They want to see that inflation before they're going to cut a little bit further. They want to make sure. It's a recalibration. They may come up with another name for this phase, but not yet. Powell says it's still a recalibration is what they're talking about. Yeah. We're in a new phase in the process. From this point forward, it's appropriate to move cautiously and look for progress on inflation. So that's where you hang that one. That was an important one. And we get 2 cuts penciled in as opposed to 4, and the markets are not stopping, man. We got 25 minutes left to go in trading. And look at this drop. As we're now at a 108 handle on the 10-year, and that is pushing our 10-year yield. I think we're probably going to be above 4.5. We above 4.5 right now? We are. We're at 4.51%, the yield on the 10-year right now. You take a look at the curve in terms of where we are, up and down. Just a quick glance. And yeah, you're talking about on the 2-year, up by 12 basis points. On the 10-year, 12 basis points as well. The peak movement looks to be the 5-year, up by 16 basis points. Man, you talk about it, right? Yields on the rise, and boy, if this is ever a breakaway in the dollar, we going back to 114? You know, compared to the rest of the world, folks, if you're watching my program when I did it in the morning, I think it was last week at this point, when you had the ECB last week, okay, with Christine Lagarde, and you had the Swiss National Bank, and both of them came out with pretty aggressive cuts. You had the ECB cutting 25 basis points. That brought their target range down to 3%. You had the Swiss National Bank cutting by a surprise 50 basis points, bringing their overnight lending rate down to just 50 basis points. CHF it is. And what's remarkable there, I tell you, my best friend lives in Switzerland, right? Went to Villanova with him. He's from Staten Island, New York. Worked for J.P. Morgan in New York before he was fortunate. Got a transfer over to Geneva to work for J.P. Morgan. He's now working in Zurich for UBS in Switzerland. I had to get it right. And I say that because he's looking for a mortgage, and they're going to be paying 1% on their mortgage. I said, man, this is remarkable. The point being, if the Swiss overnight lending rate is 50 basis points, if the European Central Bank is at 3%, and we're at 4.25%, and we're going to pause there, that is going to cause dramatic demand into the dollar, okay? Because versus the world, we are quite a game in town. And if you recall, this is exactly what happened when we were the first game in town for hikes, right? Recall, 2022, we began the hiking cycle versus Europe and the rest of the world. And at that time, the dollar accelerated all the way up to almost 115. When the rest of the world started to hike as well, and there was some competition across the globe for interest rate, for yield, you saw this come back to the range that we've been in since then. But guess what? We are now at a level in the dollar that we have not seen, folks, since November of 2022. How about that? That's going to be the story. Yields are above 4.5, but boy, if this dollar breaks higher, that is going to be a thorn in a lot of sides, as we have the S&Ps now down 150 points, 146 to be exact, okay? Yeah, 59.80 from 61.40, 160 points just like that. NASDAQ 100 off 3.2. We could hit trading curbs right now with a little bit of fear ripping into this market in the last 22 minutes. We got a ways to go. Not necessarily on the Russell. Look at the Russell off by 4.3. Stay tuned, folks. We got 22 minutes left of market action. We'll take a look at some commodities when we get back. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's right now off by 159 points, and let's move out, check out some of the movers and shakers. Amazon off 4.25%. How about it, man? And you were up to 233 pre-market this morning. You dropped $12. We came into the Fed at about 230. You jumped to Apple shares right now, down about 1.8%. Microsoft shares down by 3.2% right now. I mentioned Broadcom, down by 8.1% right now. Google shares down by 3.6% right now. Meta off by 3.25%. Okay, now it makes sense. We get the NASDAQ 100 off by 3.7%, so you better believe the big players out there are trading lower. Even NVIDIA now down off 1.1. I mentioned they were in the positive almost right before the break. But what is interesting, so I talked about this briefly this morning on the program, in this article, right? The breadth going on in this market right now, and what happens if the big dogs give it up. So what this is talking about is we've seen, folks, okay, 12 straight sessions with more decliners than advancers. Well, guess what? I can, without even looking at the numbers, folks, I can tell you that's going to turn into 13 today because there's going to be more decliners than advancers following that. That's the longest run of more decliners than advancers dating back to 1996. And when you look at some other data in there, they're saying that's the second longest stretch in a century. And there it is on the chart. More decliners than advancers. And it's been by a decent chunk, right? This has not been eking out more decliners than advancers, but why hasn't the market been cascading lower over those 12 days? You look at where the market's been without today, okay, as we've had decliners. No, this market's going up, man. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There it is. Market basically trailed up by 50 to 100 points as the, right when we hit that peak that we hit on November 11th, for those 12 days since November 27th, okay, we've had decliners well ahead of advancers. The only thing holding up this market over the last 12 days were these tech stocks. Look at the run Apple had over those last 12 days, okay? Yeah, look at the run Amazon had over those 12 days. Yeah, it's a tough move today. Amazon's just back to where we were trading 12 days ago, and that's not 12 market days. Amazon's back from where we were 8 trading days is all it is, and we're up 4 points. We're down 4.6%. This market's looking weak coming into a cascading effect here. And what was propping up this market over the last 12 days were the big shakers out here, okay? As you potentially had, this line here, it's just one gentleman's take, okay? But if you have decliners well ahead of advancers, but you have the market holding up, what's happening? Well, what's happening is those big tech stocks are where the rotation is into. Okay, and if that's where they're into, we're going to see if they can handle higher yields. Today, it's a tough one, but guess what? The Russell's the one right now, down by 5.4%. Yeah, and we might hit a trading curb coming into the last 15 minutes with the Russell approaching 7% decline on a daily basis. The Russell now back to where we were trading in July. Just like that, man. Look at this thing. You put it on a daily. Where are we? The Russell is only 70 points of where we were trading in April. My goodness, quite the rip-roaring pullback. And we got the NASDAQ 100 at 21,497. Yeah, and you're talking about highs of almost 21,000 back in July. It's been quite a run, but boy, we got some trading left, and this market's a little bit spooked with yields on the rise and dollar strength coming at you with the dollar at 108.20. We check out crude prices this afternoon. You got crude backing off. Yeah, you come into that number, there's 1:30, there's your 2 p.m., and crude, even over that time. Trades from $70.21, we're down at $69.44 right now. Now, you look at what the Fed was talking about. The major changes, of course. The dot plot, we go from basically 4 expected cuts next year to 2. All expectations are, and this is what is a little surprising, is that for this type of move, the market had an expectation that we weren't going to get 4. That's not what's priced in anymore, okay? Now it's just 2. They think it's going to take longer to get inflation under control. They see it returning to the 2% target in 2027. That number prior was 2026. Okay. And where they go from there in terms of the longer term rate, their rate where they see themselves is going to be at 3% versus 2.9. Yeah, so we got quite a revision of where they think we're going, and the market is trying to reprice that in an afternoon. Well, boy, it is quite a shift. If rates, I mean, could you imagine if the next move actually could be a hike? Now, that's going to take a lot of data, okay? But you're going to start seeing that priced into the market when you have yields rising as dramatically as they are today. I mean, you look at this move on a daily basis, folks. You just traded almost 4 full points lower. Yeah, from almost 112, we hit 111.20, and we just got a 108 handle. No, excuse me, almost 3 points. Yeah, almost 3 full points in 9 days. And we're below where we were here, and we got higher yield. And versus the rest of the world, I don't know what slows this dollar down right now. When the rest of the world has a problem, the European economy is slowing, they're going to have to cut to stimulate. And meanwhile, the Fed is going to take a very cautious approach, which means that our yields are going to remain attractive, as they should, at 4.5% right now. That's a guaranteed risk-free rate of return at 4.5. We'll see where we go. Nonetheless, dollars in demand. All right, what else we got going on? Check around to some of the movers and shakers. How about GM this morning? Yeah, look at that. So GM even off one, excuse me. Not GM. General Mills. Shame on me. Yeah. They spiked to 62. You're off by 2.9%. But nonetheless, they adjust their earnings per share. You take a look at this thing on a longer term basis, just pushing the lows, right? I was looking at this morning. Quite the trail off last year from 90 to 60, and we've just been pushing those lows. You're down another 3% today. We check out Tesla shares, talk about volatility. Off by 8.2% right now for Tesla shares. It's been quite a run for Elon, but you're $48 off that high, man. You talk about it. And we check in on NVIDIA. Yeah, back in the green. We check out some of the other high flyers this week. We check out those chip stocks like I was talking to Elliot about. AVGO, down by 7.5%. Again, you're just back to where we were at the end of Friday's action when this had a historic day practically for Broadcom. Trading higher. AMD shares down by 2.5% right now. Intel shares off by 5.2% right now. Chip stocks trading lower, man. You got it. Let's check out some of the airlines. American off by 2% right now. Delta down by 3.4%. These airlines have been on fire. United off by 4%, but boy, you take a look at it. Talk about a pricing, man. Off of 105, but boy, I don't want to get scary. But you talk about just healthy pullbacks in a market, right? Yeah, we're 23% off of this move. Maybe you got to fill that gap that we had from November. That bring you down to $79. United was just trading at $37. You talk about it, man. Bitcoin's still above 100,000, and a tough one for gold. Gold pulling back to the $2,600 price point, down by $54 right now, or 2% at $26.07. We check in on silver, down about 93 pennies, trading at $29.99 for silver. All right, folks, one more segment. Quite a reaction on Fed Day. The Fed, they're on pause. 2 cuts next year. We'll finish it up. We got 10 minutes to go in this market. And stay tuned, folks. It's going to be a wild finish as you got the Dow approaching 1,000 points in the red. Russell off by 4.2%. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets calming a bit in the final few minutes of trading as you have the Russell right now up by 30 points off of the low. Is approaching a trading curve level. I think it's 7%. We were at 5.3 to the downside of Russell, off by 4.1% right now. Dow off by 2.25%. NASDAQ 100 off by 2.9%. Look at the pop that just got, too. Yeah, you're talking about a move of 250 points. Ooh, the NASDAQ 100 is off more than 4% at one point. You get the S&Ps off by 2.4%. All right, as we finish up the program, you want to talk a little bit of cash. How about a poker tournament? A little bit of entertainment to end the program. The beautiful Atlantis. If you've never been to Atlantis, folks, check it out. In the Bahamas, it is beautiful. Not inexpensive, but make a trip there if you can, because it's a beautiful spot for sure. I was fortunate to make it there about 10 years ago myself. But they got a tournament going on, man. You talk about the economy. How about this one? $25,000. They guaranteed 2,000 people would play that tournament, and they got 1,987 people is the amount that they got in there. Let's see it. 1978, excuse me. So just shy of the guarantee. They got about 30 people left. How about Chris Moneymaker? Yeah, you remember him? He started the whole poker craze. He's fourth place, sitting with almost 60 million chips with 30 people left. And how about the payouts? If you make the final 9, you're guaranteed $1 million. I think everybody's already got locked up about 180,000 as you've made the top 30 players out of almost 2,000 players in that tournament. But yeah, you make the final 9. The final 8, which is the official final table. They're playing 8-handed, I believe. You get $1 million, all the way up to $6 million up top, and not bad. Playing a little poker at the Atlantis. But boy, you talk about the economy, right? You got 2,000 people out there putting $25,000 up to play a poker tournament. Not bad. $50 million for a poker tournament outside. Now, that is technically a World Series tournament is how they call it, but nonetheless, you talk about some cash. As traders, you can appreciate it. How about it? $6 million up top for $25,000, but boy, that's a lot of money in a poker tournament. Folks, thanks so much for tuning in on a pretty wild day as we got a Fed decision. You got markets in negative territory. Thanks for tuning in. Have a great night. Have a safe night. I'll see you back here at 9 o'clock tomorrow morning. Have a great one, folks. Have a great night.